All right. All right. Good day, everyone. You're all welcome to uh, Entry Masterclass group. For those that just joined us, period to this time, we drop a poll that each and everyone here we should vote, and let's come up with the right term, the best suitable term for us to be having this section. And we all concluded that like 90% said, well, around 9 to 10 p.m. will be better. But from the experience I had in our previous sections, most times if you want to record during a Telegram live, once in the middle of the section, network issues may come up, and you discover that whatever you're recording will stop. And also, Telegram live do, like, if you're on Telegram live, I don't know if it is my part, or sometimes it do drag my trading view, my derived trading view. So this time around, I resorted to making it in form of a video. So I believe this will be much more effective due to the fact that you can download it on your phone. You can go over it one time, two times, in case you did not get it clear at the initial stage of you going through the video. You can decide to go over it on and again, so that I can get the clarity I'm trying to share with you here. So the purpose of this very section, the class, the group you join, is to master entries, right? But whether you're new to trading, or you're already trading before but not yet profitable, this very section is very, very important. For new beginners that have not even, like, you have not traded before, you can still go through whatever I will discuss here. It's going to be informed. It's going to be, the clips is going to be like 5 clips uh, discussing details of this entry masterclass, like the details I'll be giving you here. And once you're able to, like, follow me closely, get the details I'll be discussing, you believe you mean you'll be able to trade profitably despite the fact that you have not known anything about trading before. So before we go to entries proper, we need to know some certain things. The hedge I want to share with you, you need to know what the hedge is talking about, because you can't just master entries if you don't know the hedge you're trading. The hedge I will share with you, you need to understand structure. So the very first thing we'll be discussing, which is this very video we have now, this video is going to talk about CRT, the candle range. What is a candle range? This video is going to talk about the CRT. So after this very clip, the next video we talk about structure. So after structure, we go to PDRs. PDRs, these are the levels where you're going to wait for price. Your areas of interest, or your point of interest, where you're going to wait for price to come and tag you in. Because for a professional trader, you are not expected to be chasing price. That's one of the rules of trading. Rule number one says you should never ever chase price, right? So as we proceed, I'm going to give you these rules. You should never ever chase price. For you to trade profitably, you have to wait at certain specific points of price to come and tag you in. So before we this now, the PDRs are these levels, or these are key levels you're going to wait for price to come and tag you in. We call them PDRs, that is premium and discount areas. So after discussing the PDRs, we now go to entries proper. Now the entries, we have two forms of entries, basically two forms of entries. The very first one is what we call CR3 reversal, and that is reclaim block entry. CR3 reversal is the same thing as reclaim block. And this type of entry on M15, you're going to see it in form of a reversal, but on 4H is going to be a 4H pro trend continuation. What I mean by, when you are on a 4H, when I mention 4H, I'm talking about 4-hour time frame, and when I'm mentioning M15, I'm talking about 15-minute time frame. So this type of entry, that is CR3 reversal slash reclaim block, when you are on M15, you're going to see it in form of a reversal, but on 4H is going to confirm, it's going to be a 4H confirmation pro trend continuation. Yeah, it's going to confirm, uh, it's going to be a confirmation for pro trend continuation on 4H. So the second type of entry we discuss is the simple breaker block or mitigation block plus FVG. So when we call the simple and reclaim breaker block, they are also the same thing, is the same type of entry. They are both for continuation trade other than M15 or 4H pro trend. But the simple breaker block is kind of a low probability entry where you find a reclaim breaker with FVG present, with presence of FVG, that makes it high probability. So the two basic entry types we have, which is self reversal and reclaim block, or simple breaker block or mitigation block plus FVG slash reclaim block, that is for continuation. So we discuss these two type of entries properly. So the videos we have in total in this very section, we'll be having the very first video to discuss CRT. The second video we discuss structure. We need structure. I'm mentioning again, structure is the basics foundation of technical analysis. Without structure, you are doomed. Without structure, your money is meant to be given to the market. Without structure, there's no way you can trade the financial market profitably. So the third video, the second video, we're talking on structure, whereby the third video we're talking on PD arrays, and the last two videos, the last we having 5 videos total. The fourth video being on CRT reversal slash reclaim block, and the last video will be talking on simple breaker block slash mitigation entry, which and reclaim block entry, where these two type of entries will be talking on continuation entry, right? For both M15 and for each. So let's dive in proper to know what CRT means. Now, before we dive in proper to know what candle range CRT means, we need to discuss some certain things to get clear details of CRT. When we talk about CRT, candle range theory, CRT means candle range theory. So, but before we dive in proper, let's get to know this power of three. What's power of three? It's a terminology from ICT traders, right? So, and what did they say? They said price move in stages, in phases, right? The very first phase is what we call the accumulation phase, right? And in this phase, what we our expectation with the price will just be starting orders. There is no a clear direction in the market, right? It is a range bound market where there is no a clear definition of whether this is an uptrend or a downtrend. So, and in this phase we call it accumulation phase. In this phase, we experience liquidity, what's it called, levels being below the range and above the range. So what price is doing here, when it's starting orders, once this phase is complete, it will like try to clear the liquidity of one side of the range first, and after clearing the liquidity of one side of the range, it will now distribute the holdings to the other side of the range. So this is what power of three means. The very first phase is accumulation phase, the second phase is the manipulation phase, and the third phase is the distribution phase. We expect price to accumulate in the first phase, and after the first phase, we expect price to like clear liquidity of one of the bottom or the top of the range, right? If it clear the liquidity of the bottom of the range, which we call the manipulation phase first, then the third phase will be distributing that liquidity to the opposing side. And if it clear the liquidity of the top of the range first, our expectation will be the next phase will be distributing the liquidity of the holdings of the liquidity clear to the other side. This is what I mean. This is the accumulation phase. Let's say if the accumulation phase is, if price traded this way, this is the accumulation phase. If we first clear the liquidity of the bottom of the range, then we expect the third phase should be distributing it to the opposing side this way. At the same time, if price range like this without a clear direction, either uptrend or downtrend, if it clear the liquidity on top of the range first here, then we expect to distribute the holdings of that liquidity to the opposing side. So this is what power of three means basically. So with this power of three, we see that it is embedded in one single candle. We can find power of three in a single candle, especially in higher time frame. We can find power of three in two candles. We can find power of three in three candles as well. So it is from this power of three that we formulate candle range theory. So the purpose of this very video is for us to understand candle range with regards to its theory. And what does the theory says? The theory says that since we know the function of power of three, that is when the price accumulates in certain phase, once that phase has ended, the next phase is for price to clear liquidity either at the top of the range or bottom of the range before distributing the holdings to the other side of the range. So candle range theory now is stating that we are going to use the power of three in three candles. But before going there, let me give us details about candle. Is it candle anatomy or properties of the candle, right? So you see this candle here, this is a bullish candle, right? You can look at this candle clearly. The body, this is a bullish candle, right? That's why the body is green. The bottom part of the candle is telling you the lowest level the price reached before trading up. This is the open price. Price open here. This is the open. This is where the price open, but it traded down to this part, to the bottom part, before distributing up. Now the top of the candle is the highest point the price gets to before it retraces to close here. So in a bullish candle like this, we have the open here, it trade down to the bottom here before moving up to the highest point here, which is the top of the candle. So when it gets to the highest point, it now retraces and form. So this is the formation now. It open like this, it first of all accumulates, right? It accumulates this way. Now it just manipulates to the bottom before moving up to the top, right? Getting to the top, it now retraces and settle and close. So let's remove this out. You can see this is power of 3. Accumulation, manipulation, it distributed up, then settle. And this is what price we keep doing. This is what price we keep doing. It will keep what? Accumulating, manipulating, and what? Distributing the holdings to the opposing side of liquidity. If it is uptrend, this is the higher time frame candle, it will keep on doing this, doing this. So this is what we mean by we find the power of 3 in a single candle. The same way, if it is a bearish trend on higher time frame, this is a bearish candle on higher time frame. We have the top of the candle. It means this is the opening price. The price retraces up, traded up first to this level before the sellers push price down to the bottom part, then it come back and retraces to close here. So the difference between a green bullish candle and a red bearish candle is the opening price and the closing price. You discover that in a bullish candle, the opening price is here, it opens beneath and closes on top, right? But for the reddish candle, it opens on top and closes beneath here. So that's the only difference. The body remains the same thing regardless of the color. This is the body. So we can find the power of 3 in a single candle, we can find it in 2 candles, and we can also find it in 3 candles. But for the purpose of CRT, we are going to be looking at power of 3 in 3 candles. I just made the explanation in one candle so that we know that okay, in each of the candles we are seeing in higher time frame, power of 3 is embedded in them. That when you mark your candle on higher time frame and you change the time frame to a lower time frame, you're going to see the power of 3 there. You will see the range where price accumulates, manipulating, and also distributing the holdings to the other side of the range. Because at the top of the range there is liquidity, at the bottom of the range there is liquidity. So what the candle range theory is now saying is, for us to see candle range theory in 3 candles, it means the very first candle will represent a range, right? Just the way I've said it previously in the phases. The very first candle will represent a range, which is the accumulation phase. The second candle will represent the manipulation phase, where price move on to sweep liquidity of either top or bottom of the range first. So after sweeping the liquidity of either the top of the bottom, this case bottom, it has swept the liquidity of the bottom. Now if it closes inside, we are expecting it to distribute to the other side of the range. So in this scenario now, look at, in this case, we have candle A to be the range, candle B to be the manipulation. So we expect candle C to distribute to the other side of the range. So what did candle B did? Candle B is the manipulation. It first of all traded down, right? And cleared this liquidity here, these 2 liquidities here. And after it has cleared, it closes inside. So whenever we see an higher time frame candle, especially on 4H or daily, but for this case, we'll be referencing it to 4H only. We'll be referencing it to 4H only. So if we are on 4-hour time frame and we discover that structure is very important, but the purpose of this video is for us to understand candle range. So this is explaining candle range only. So if we find an higher time frame candle, let's say 4H this way, and the next candle traded down but closed inside. What I mean by closed inside, look at the body. Had it been the body closed outside here, there's nothing like candle range reversal here. There's not like CRT reversal here. But since it closes inside the range, so there is presence of CRT, and our next expectation is for price to open. It will come to the middle of the wick of the uh, manipulation candle before distributing the holdings to the other side of the range. So our candle A is the range, our candle B is the manipulation, whereby candle C will be the distribution. So if we see any candle in this form, this is what we call CRT reversal. This first candle A is the range, the second candle is the manipulation. Then our expectation is that since it closes inside, the next candle C will now open trade inside, but come back to the midpoint of this candle B before distributing the holdings to the opposing side. And why is it distributing the holdings there? It's going there to also sweep the liquidity of the uh, the liquidity on top of this candle, on top of the range. So this is what CRT reversal is. This is what the theory says, that whenever you find a range, especially in three candles, the first candle will represent the range, the second candle, if it closes inside, will be the manipulation, and the third candle, your expectation will be to clear the opposing side liquidity. But mind you, if it did not close inside, this is another thing entirely. This is CCT, candle continuation theory entirely. But the moment it closes inside, it confirms reversal. It confirms reversal. I'm going to give you details explanation when we get to the show you details of how you're going to market when we get to the live market. So this is for bullish scenario. Look at this place. This is for bearish scenario now. For bearish scenario, we can see that this candle here, candle A, is our range candle. The second candle is the manipulation candle, and it closes inside. Had it been it closes outside now, there is no self reversal here. This is a continuation. This is another thing entirely. This is another thing. This is candle continuation theory, but for us to find reversal, it means it must close inside, then leave the wick. The wick will always sweep. You know the difference between a liquidity sweep and liquidity run. This in this case now, this is a liquidity sweep, right? Because it first of all traded outside the range. Where is the range? The range is the bottom of the candle to the top. That is our range. If the body closes outside, it means it closes outside the range, and there's no reversal in this case. But since it closes inside, the price is telling you is looking for a way to reverse to the opposing side of the liquidity. So if it closes outside, there is no reversal. But since it closes inside, price is telling you it's looking for a way to reverse to the other side of the liquidity. So in this case, if it closes inside, just the way it has done, it happened here. Our expectation we were price is going to open, the next candle will open, trade inside, but reverses back to the midpoint of the wick before distributing the holdings to the opposing side of the liquidity. This is for bearish scenario. So, and this is how it will look like when the theory is complete, when the formation of the power of three is complete in three candles. This is the first candle that represents the range. This is the manipulation where it sweeps liquidity of the bottom of the range first. Since it's sweep liquidity of the bottom of the range, so we anticipate that it's going to distribute the holdings to the top side, to the opposing side liquidity of that range. So it sweeps the liquidity of the very first side. Now it's distributing the holding, and this is the third candle we now be trading. This is the third candle we'll be looking up to trade each and every time we find this kind of setup in the market. This is the candle we are looking to trade. So this is for bullish and this is for bearish. So how are you going to be drawing it? How are you going to draw it if you find this kind of setup in the market? First of all, this is how you're going to draw it. You carry your gann box. You first of all draw the range candle from the bottom like this. It's for bullish. You draw it from the bottom to the top to the next candle, and must be in 4H. It must be in 4H. It must be in 4H. You are marking this like this on 4H, on 4-hour time frame, right? So now when you get to the manipulation, you are only drawing it from the wick where the body starts, like from here, from the body to the bottom part of the wick, to the bottom part, to the next candle, right? To the next candle. You're drawing it like this, so that when you change this from 4 hours to 15-minute time frame, you'll be able to see details of where you're going to enter. Mind you, I'm going to show you details of how you're going to be entering the PD arrays, the inverse fair value gap. You're going to be seeing the order blocks, the balance price range, all how the PD arrays you're going to see to confirm your entry. I'm going to show you later. The purpose of this very first video is just going to let you know what candle range is all about, right? The purpose of this very first video is to let you know how we come about candle range theory and to understand how it works. So this is the third candle we are looking to enter from the 50% of the range. And that's what the theory said. This theory said the third candle retraces back to 50% of the manipulation candle, the wick of the manipulation candle before distributing it to the opposing side. So your stop loss will always be immediately after at the bottom of the wick of the manipulation candle, the second candle, right? So this is how your setup will look like on 4H. But on 15 minutes, it's going to you're going to see it more clearly, right? With minute details. So here, always wait for price. Just like I've said earlier, you have to wait for price. You don't chase price. When price closes inside like this, you are anticipating that it must come back to either 50% of the range or 75% of the wick of the second candle. It will retraces back to either 50% or 75% of the wick of the second candle before trading to the opposing side. And in that way, that's where you get to find sniper entry, right? This is how you get to find sniper entries, because this very edge is very easy for beginners to understand. They know where to put their stop loss, they know where to enter from. The theory said it must, like 90% of the times or 80 to 85% of the time, price will retraces back to the midpoint of the wick. Like when you mark your wick of the second candle that manipulate it, you on higher time frame for it, you see it as a wick. But when you change it to M15, it's going to be in form of small M15 candles. But you see it in form of inverse FVG. When we get there, you will get to know the details. So the price will first of all close inside, then retraces back to 50% or 75% of the wick of the what's it called, the manipulated candle before distributing to the other side of the range. And this is how you're going to mark it. You mark the very first range candle like this down to the what's it called, next candle. Then you mark from the wick alone of what, the turtle soup candle, that is the candle that sweep, the manipulation candle. You can call it manipulation candle, you can call it turtle soup candle. This candle that sweep, then you mark it this way to the next candle. And when you turn it to M15, you are going to see the clear PD areas you are going to enter from. If it is change in state of delivery, which represent order block, if it is a fair value gap, if it is a balanced price range, if it's an inverse fair value gap. BPR, which is balanced price range, is a refinement of inverse fair value gap. So we are going to learn all these details when we get there. But this is just for you to understand what CRT means. So with this, let's go to the live chart and mark some of these things out so that you understand it properly. For example, this is V751S, and we are already in what, 4H. So this is a live market now on 4H. Let's look at some of these things I've explained just now. Like in this place, we when we talk about structure, you have to put structure into consideration. And these candles you are seeing, there is a specific time of the day you are going to look for these setups. For CRT, the Totosup candle formation will always be 9 a.m. 9 a.m. in the morning, 1 p.m. in the afternoon, and 5 p.m. in the evening. Then 9 p.m. in the evening, 1 a.m. in the night, and 5 a.m. in the morning. These are the 6 periods of the day within the 24 hours period that you'll be looking for this setup to trade. So the Totosun candles will always form around these hours, 9 a.m., 1 a.m., because you are dealing with 4H time frame. So the closing of the candle is always in every 4 hours. If you close this 9 a.m., the next time you are looking to trade again is going to be 1 p.m. From 1 p.m. to 5 p.m., 5 p.m. to 9 p.m., 9 p.m. to 1 a.m., then to 5 a.m. So let's mark it out and let's see what I'm trying to what the theory says at regards to the live market. Let's get some examples from the live market. So this is volatility 751S. This is volatility 751S. Now the structure is bullish. The 4H structure is bullish, and you can trade CRT either in line with 4H or against 4H. But I will always advise you to prioritize those ones that are in line with 4H, because those are the ones that will take you to full TP and even surpass. Most ones you trade against 4H, they may give you profit to the half of the range, and sometimes it will get to the full TP, but like It's not every time, if you are trading it against the range, against 4H bias, it's not every time it will go to the full TP, some will reverse. But any sell that you find, any candle range that you find, and you are seeking to trade it to attack the opposing side of liquidity after the closing the candle inside the range, if it is in line with 4H, like if 4H is going up and you find a sell that is also going up, it will definitely surpass your TP and to even go further. So let me mark at least some examples so that you get to understand this properly. So let's look at this place. Let's look at this place. Let me take my gun box. Let's take this candle as our candle range. Let's take this candle as our candle range. Let's mark it this way. You can see I'm marking it to the next candle. So the next candle now is the tortoise candle. I hope we can see this clearly. So this is the next candle. Let me mark only the wick. We are marking only the wick to the next candle. Mind you, as at the time I'm doing this, the third candle has not formed yet. But the only thing that give me the confirmation is the closing of the second candle inside the range. So we mark it in 4 each like this. This is 4 hour time frame. I hope you can see. This is 4 hour time frame here. So let's change this to 15-minute time frame now, so that we can see how it look like on 15 minutes. Yeah, this 15-minute time frame. Okay, so this 15 minutes, we have to scroll back for us to see what we have just marked. We have to scroll back because that is not a recent price action. I went back just to show us how CRT formation, you can use a CRT as entry. You can frame your entries from CRT candles, candle range theory. The next example I will do, I will make sure it's very close to, so that when I turn it to M15, we can see it fast. I shouldn't waste our time. But since I've done this, let's scroll back so that we can find it. I want us to see how it's going to look like on M15. How it's going to look like on M15. How it's going to look like on M15. And once we come to structure, we understand how we're going to find CRP, so that it's not going to, it's like we won't be able to see that because, okay, let's see. Okay, it's like that is too far from the recent price action. Let me go back to 4H so that I will show you the one you can see easily. Maybe the recent price actions. The recent price actions. Okay, so let's look at this place. Look at this, a recent price action, right? Let's take this candle as a range. This first candle as a range. Let's take this first candle as a range. Yes. Now let me mark um, the second candle that closes inside the range, right? So see the first candle here, see the first candle I just marked. This is 4H. I am marking the second candle that closes inside the range, only the wick of the second candle to its top here. I'm marking it to its top there. Okay, this is, wait, okay, so let me mark the wick of that candle. Pay attention here. This way you need to pay attention so that you can get to understand what the theory says with regards to a power of 3 in 3 candles. So I've marked the wick. Now let's go to M15 now. Let's go to M15 and check. Let's go to M15 and check. Okay, so this is M15. This everything, let's scroll back to, yeah, this is what we just marked now, right? This is what we just marked. So look at how it looked like on M15. You mark it on 4A so that when you go to M15, you're not going to be confused of what you have marked out. So that's when you mark it so that you can see it clearly. So this bigger box is my main candle. The one on top is the wick of my tortoise candle, the candle that sweep liquidity of the first candle. Now this candle now is a range. This candle now sweep the liquidity of my range candle, and I am marking out only the wick. So you see on M15 I'm seeing it as the closure of the candle is like I'm seeing it in form of a body, but on higher time frame 4H I'm seeing it as only a wick. So most attempts here you see that it formed a balanced price range. You don't know what balanced price range is now, but it formed an inverse fair value gap, and you see change in state of delivery here clearly. So you can just mark when we get to PDRAs, I will let you know the hierarchy of PDRAs, how you're going to, like, when you see this and you see that, which one you're going to follow, which one you're going to use. But for this purpose, let's use only, I told you that most of the times price will come and respect 50% of that wick, and 50% of that wick is that line, the middle line of your gun box. There's a way you set your gun box so that it will only remain the midpoint. So in the midpoint, that's the midpoint. I'm now going to carry my position 2, and I'll be waiting for price here. Mind you, as at the time I'm drawing this, the third candle has not yet formed. So if the third candle form, you see this is 9 o'clock, right? This is 9 o'clock. This is UTC Lagos time. This 17:00, that's 5 p.m. as I time of the formation. So this is 5 p.m. now, and my price closes inside. So after 5 p.m. I'll be looking for my setup. I'll be looking for it to retrace this back. And what did the price action did? The price action actually this is my stop loss. The price action actually retraces back to almost the 50%. You know, it is not a fixed line, right? It's not a fixed line, it's a zone. It almost peak. So if I'm trading this and price has come there, most of the times I will just enter with market execution, right? Since I'm not, but if I'm sending it as a what's it called signal, if I put the limit there, I can't just say okay, change the limit to this, change the limit to that. But most of the times, we personally we do enter once price is getting close to the entry point. So you can see that price went back to tag us, and in this case it just made by a few pips, by like 1 or 2 pips. And see the our target here, we are targeting, this is our target, and price surpasses this down. So this example is a candle range now. This first box is our range, this is total soup. It first of all clear the top of the range, and after clearing the top of the range, we anticipate it to come for the liquidity at the bottom of the range, and it actually come to the liquidity at the bottom of the range and even continue downward. So this is the very first example. Let me give you one or two more examples for you to understand candle range proper, how to draw it, and how you can frame your entry from it. Let's go back to 4H. Let's go back to 4H. At least we find more and more. Even though we don't find it in this pair alone, we go to other pairs to go and find it. You have to take structure 4H bias into consideration. You have to take 4H into consideration. When we get to 4H, you need to understand it properly. Here, look at this candle. Let's take this candle as our range, which is the candle A. Let's take it as our range. See the second candle here, the candle that manipulates. You see this candle, I hope we can see it clearly. Let me zoom it a bit so that we can see the second candle that sweep liquidity of the bottom of the range candle is this. We are only marking the wick, so we are putting it where the body starts, right? So we draw it down to the bottom of the wick. So here, let's go to M15. I believe we should not be able to scroll back before we can see this. Let's back to M15. So this is how we mark it out on 4H, and when you come to M15, you'll be able to see it in details and how you can even get to enter from the retracement. So this is what we just mark on 4H. So look at the first candle, look at it in form of a range, look at the candle that manipulates and closes inside. It closes inside. What did the theory talks about? It said after closing inside, the third candle must retraces back to the midpoint. And where's the midpoint of the wick? The midpoint of the wick. We said the midpoint of the wick, not the midpoint of the candle itself. The midpoint, you see how I mark the wick. This is the midpoint of the wick. My gun box is telling me this is the midpoint, so I will just place it here. And most of the times it used to be in line with our PD array that is present there, which is the order block, right? So in this case, on top of the order block, we can also see the series of candles that formed before inversing, that is a change in state of delivery. So we don't want to use the order block, we can use these ones, but most of the times when all the signals we do send to group, we use the extreme PD array. So in this case, I can just, okay, let me put it on top of the PD array this way and draw it. So here I'll be having my, what's it called, my position 2 to buy. Mind you, as at the time I'm drawing this, my third candle has not formed. Are you with me? So my stop loss will always be at the bottom, immediately at the bottom of the candle that shift. So, and I will anticipate for me to take profit on top of the range. So I said if you are in line with 4H, most of the times it even surpass. So, and see price after closing inside, this is the point of closing. What's the time? As at this time it was 9 p.m. That is 21:00, 9 p.m. It closes inside, then it retraces back. You see, almost to our entry, and just maybe by 1 or 2 pips. The moment price is close to our entry like this, most times you enter. Most times it will peak reversal, what's it called, entry that give the most snippest entry I've seen in the market. It will come exactly to that PD area you mark. If it is extreme PD area, just come and pick it. If the trader there is, if it is not against the 4-inch bias, it will just come and pick it. The most snippest entry I've ever seen. So that's why, and it's easy to understand for beginners. It's very very easy to understand. You shall understand what I've tried to explain since the beginning of this video. So it will pick, and you set your take profit, or you can manage your trade manually as you wish. So this is what candle range theory is all about. As I've said earlier, the purpose of this video is for you to understand candle range theory. The times of the day you will be looking to find the total soup candle, whether it closes inside or outside. Closing inside is what we call sell reversal. If it closes outside, if the total soup candle, which is the manipulation candle, closes outside, that's another thing entirely. That is CCT, candle continuation theory, or sell-tree continuation. We will come to that. That is the second type of entry we will also treat, which is when the one we call simple breaker block, or reclaimed breaker block, right? And that one we have the low probability and high probability. But when we come to that, you also understand it. So most of you that just joined this group from the Signal group, you are not part of Zenith Trade yet. For you to be part of Zenith Trade, you need to undergo some you need to do certain things to qualify you to be in those our group. Because if you're a member of our, like if you just join our Signal group and you also join the entry masterclass and you think, oh, you are with Zenith Trade community, no. For you to be with Zenith Trade community, you have to be a member of our elite members group, or the pro traders group. But you can't just get to request and join like that. You need some certain criteria. There are certain criteria that will qualify you to be in that group. So if you are interested to be a member of that group, you can see my contact at the bottom left hand side. You can just dial me, I'm interested, then I will let you know. I will let you know what are the criteria for you to be a member. For you to be a member is very important, because each of the trades you took, let's say you are a member of that group, any trade that you take and go to Excel, you have to submit it, and you have somebody to attend to you to review your trades. What are the reasons why? Why is your trade? Why did your trade went to SL? Because the difference between someone that is profitable and that person that has been trading 3 years, 4 years, no, is not yet profitable. They did not review their trades, right? They will take a trade, they will take a setup, they will trade it. If it went otherwise, SL, they will never mind to know why. The difference between a profitable trader and someone that is not profitable for a number of years is why. If you take a trade, it goes to full 30 years. You know that your analysis is right. But if it went otherwise, you need to find why. If you're not finding why, then your journey is very long. And I don't even know when you get your destination. So the essence of you being in Elite or Pro Traders group is there is always someone that will review your trade, each and every of your trade. Like the very first week you join, before you get to a month in that group, if you take, let's assume in the first week, if you take 5 trades, if 3 trades went to SL, 2 go to take profit. If the person help you to review the 3 trades, it's going to let you know the mistakes you make. Those mistakes, you journal it, you're not going to make that mistake again. Before you reach 1 month, 2 months, if you take assumption, you take like 30 trades in a month, you are expected not to lose an up to 5, or let's say you're expected not to up to lose, let's say 30% of that number. If you take 30 trees in a month, you're expected not to lose up to 10 trees. The remaining 20 trees will be successful trees. But if you're not a member of that group, to have someone to attend to you in terms of review, so there's going to be a challenge. Each of your trees needs to be reviewed. So the group is free. Everything is free. Everything about any trade is free. But for you to be a member of that group, you need certain criteria. You need to qualify for certain things. That means for me to let you know um, what you need to do to be a member of those two groups, the Elite members group and the Crocodiles group. So let me go to the next, what's it called? Um, Let me go to the next asset. Maybe I will find more examples on how you're going to draw your salary on 4H, so that you can come back to, what's it called, M15 to find your entry. I said you will trade this in line with 4H bias. You will trade it in line with full trend, your 4H full trend. If you are trading it against it, it's not like it's that bad, but most of the times you won't get full TP. Your trade will reverse when it gets to middle of the range, especially if there's an FVG in your range candle. If there's an FVG at the middle of your range candle, when you check it on 15 minutes, you see that it is reversing. So, and you're going to, when you will get to structure, the next video is going to be on structure. You understand why you have to trade it in line with 4H bias. So here, let me show you more examples on CLT. How are you going to draw it? First of all, look out for your range candle. In this case, see this candle here. We take it from the bottom to the top. That's our candle A, range candle. This is jump 25 index. See the candle that sweep the bottom of the range candle and closes inside here. Look at it. So we take only the wick. We are interested in the wick of the manipulated candle. We are interested in only the wick. So we draw it this way. Now let's go to M15. Let's go to M15 and see how it looks like on M15. Oh, our network is let's see. Okay, let's see. It's like we're having some fluctuations in network. Okay, let's go to M15. We're going to see how it looks like on M15. Okay, M15 now. Okay, fine. Let's see how it looks like on okay, good. See what we mark on 4H. See how it looks like on M15. See the range candle. See the total slope, right? And we said the theory says that most like times once it closes inside, see where the price is when it closes, it will come back to. So the middle of the gun box is the what? The middle of the gun box is the what? The 50% of the total slope wick, or 50% or 75%, and see what happens. See the snippest entry it gave us. See the snippest entry it gave us. If we are looking to trade the third candle, mind you, as at the time we mark this, the third candle has not yet formed. As at the time we mark this, the third candle has not yet formed. You know there is no playback in what's it called? There is no playback in synthetics, so we should have used playback too. But train your eyes, you will still uh, understand what we're trying to see. So see the snippest entries give us here. See the snippest entry. The very first examples I gave you there, it only means by what? Few pips, like one or two pips, one or two pips. And here, see the snippest entry gave us the 15% of the week. So if you follow me closely, when it comes to when I explain the PDRs you're going to be looking at to enter, or you by only using this 50% self, is enough for you to trade profitably. So this is the entry gave us on M15. Let's go back to 4H and show you one more example before I end this section. So that's the example 1 on jump 25, and this one is in line with 4H. See the snippest entry gave us. So let's assume you want to trade it against, if you find CRT against the trend, let me find one. Okay, let's say this one is against the trend, but it's coming from what? A liquidity level or a key level. You can see I draw a key level on top. Maybe that's a PDRA on 4H. When we get to PDRA, you get to understand that. Don't let me confuse you. This is just this video is for how to draw. So this is our range candle here. This is our range candle here. Draw it to the next candle. Then carry gun box again. You're only interested in the wick that manipulated of the manipulation candle. Only its wick. That's what you're interested in. Draw it to the next candle here like this. I hope you can see. So let's go to M15 and check how it looks like. Alright, so this M15, this is the first example I gave here. This is the second example now. And what the theory says, after the top of the range have been cleared, the liquidity of the top of the range have been cleared, that is the liquidity here. This is the bottom of the range. We anticipate that price is going to come to the bottom of the range. So the PDRs we are going to look out for, the change in state of delivery, the order block, the CSD formation. Most of the times you find it in line with where the breaker blocks and every other thing is. And if you don't know those things yet, let's simply pick what's it called, the 50% of the candle that manipulated, the wick of the candle that manipulated, and let's put our sell position here. The stop loss will always be on top of the wick of the candle that manipulated. So in this case, price did not get to the 50% of the wick, but You can see that a fair value gap here on M15. It created an inducement here. There's a liquidity on top of here, which is a bit far from the 50% of what of this. So there are criteria and hierarchies of what you're going to see in the PD array that will be present to tell you exactly where you're going to enter. But the reason why the signals we are sending to the group, like 50 or 60% do miss entries, because you people have small accounts and we don't want to blow your account. So we always give you guys the extreme, what's it called, entry, the extreme PD array. So that's when you see some trades we pick, some we not pick. Like in this case now, it will give you 50% of the range. You can see that price retraces after closing inside, it retraces but did not tag us in. But our bias is 100% correct. You can see you can trade this down. So this is basically what CRT means. Mind you, from the video I said we'll be having 5 videos in total. The very first video, which is the one I've just concluded, is talking about what CRT candle means, and that's all what I've just explained. The next video will be on structures, then we'll talk on PD arrays, and the last two videos will be CR3 reversal, which is reclaim block entry, and the last one will also be breaker block or mitigation with FVG, and or reclaim block entry. That entry is for continuation trend. That one is a bit advanced. I would say this one is for people that have already been trading and they know all these terminologies very well. But as a beginner, this alone is enough for you to make money from the market, to make your first 1,000 to $10,000. This entry alone is enough for you to make whatever you want to make from the market. But as time continues, you still have to learn the other entry types. All right. So I believe the rules of the trading that I may mention earlier: never ever chase price. You can't chase. If you are chasing the price, there's no way you trade profitably. Do not, second rule is, do not give him your emotions. If you give him your emotions, there's no way you can manage your trade properly. Price, you can enter price and price is in your favor. The other time, little time you see price retracing to your entry and you are started to giving emotion. If you are doing this, there's no way you can be profitable, because you always be mismanaging your trade. So for you to manage your trade profitably, it means you have to trade with confidence. And when you know all these things, you will be able to trade with confidence, believe you me. So, and the next rule is you have to pay attention to details. I'll be giving some materials out. I'll be giving you some videos too to watch, so that you will digest more on what this theory says. I'm just giving a summary of what the theory says and how you're going to frame the entries. There are details you still need to go and master. I'm going to send some YouTube links for you to go and master those details as well. So I will attach some links to this video. Get those links, go to YouTube, watch more details about CRT, journal some things on your own. Maybe I did not say everything here, but those things, they are going to help you properly understand what CRT means. So, as I said earlier, for you to join any trade, being a member of the Signal group or this entry masterclass group does not make you a member. For you to be a member, there's a criteria, and for you to know the criteria, dial me. My WhatsApp is at the bottom left hand side. Everything is free, everything is free, but you need some criteria to be a member of that group. Dial me for me to tell you those criteria. Now, for you to set up your trading, your synthetics, your synthetics, or what's it called, trading view, it's different from the currencies. I have a trade on Telegram. It's not on Telegram. On what's it called, X, Twitter. So that X is going to help you to set up your trading view in case you don't have the trading view on your device. If you can just go to X, search for Zenith Trades at Zenith Trade. Just the way it is here, you're going to see my handle. Just check my post, my previous post. You're going to see, or you can dial me. I'll send you the link so that it just take you straight to how to set up your trading view, your derived trading view, right? So the next video is going to be on structure, especially Rose of God. After you digest these videos and all the materials I will attach to this video, I will create a video on structure. So when you understand structure properly, which is the basics and the foundation of technical analysis, believe you me, with only the CR2 reversal, you're good to go. You're good to go and start making money in the market. So after the end of this very class, let's say in the next 2 months now, maybe after I finish the 5 complete videos and all the things, all the hedge I wanted to share with you, you are not expected to remain in that signal group. Though it will depend on how committed you are. If you give me feedback and show me the result you have as you go through these details, and you keep on practice consistently. If I see your improvement, I have to remove you from the signal group because you are not expected to remain there. Now you are learning how to catch the fish by yourself. You are not expected to be found where the fish is being distributed again. So the essence of you joining the entry masterclass group is for you to master it by yourself. So be consistent with commitment, with your consistency. Once you're committed with your consistency, definitely you will know how to do it. And with time, I just give you 2 months now. The very first month will be for you to learn the details. This is the beginning. This video is the beginning. Within this is before we round up this month, I would have finished the 5 complete videos. So after this month, I will expect you use the next month to practice, to stay committed to your chat, practice, and after that, I will move you from that signal group. I will, if you are giving me feedback consistently on your progress, then I will now let you know what you need to do to be a member of the Elite group or the Pro Traders group. And once you're a member of that group, it means you have, somebody will hold you by the hand to put you through on all what you need to know to master financial market profitably and how you can trade it profitably. So let me run this up here. I believe this should be up to an hour already. I don't want the videos to be too much so that it will look boring once you're watching it. So this all works out to means the next video is going to be on structure. After structure, we go to PDRAs, and after PDRA, we now look into entries proper, the reversal or reclaim block entry, which is 1015 reversal, or what's it called, 4H continuation entry. And the second type, the reclaimed, the symbol breaker with FVG, and reclaim breaker block, which is a continuation trend. But those ones, they're a bit advanced. It's for people that have been trading. But you as a beginner, master this first. When you master this, make money with this before you think of that one. All right, you have a nice day. Bye for now.